Future Hacker. Life. Path. Future.
Hello, everybody. Welcome to the international edition of Future Hacker. This is your host, Maria Taide, and today we are talking to David Lawant. He's the lead crypto researcher at Bitwise Asset Management, the first largest crypto index fund manager and one of the companies that is leading the process of creating and approving a Bitcoin exchange-traded fund in the United States. Before moving to the crypto world, David worked for 11 years as a sell-side equity analyst at Itaú BBA and JP Morgan, where he was ranked by Institutional Investor 13 times as one of the leading analysts in his industry. Hi, David. Great to have you with us. How are you doing today?
Hi, Maria. Thank you for having me. It's great. I'm feeling great. It's great to be here.
So, David, could you just please tell our listeners a bit about your background and what's actually Bitwise about?
Yeah, of course. Happy to. So, I work at Bitwise. Basically, I'm an engineer by training. I'm Brazilian. So I graduated from the Escola Politecnica in electrical engineering, but then I ended up developing most of my career in the investment sector. I worked, as you said, as a sell-side equity analyst in a few investment banks in Brazil for a number of years. By 2015, I got a little bit tired. I was looking to broaden my perspectives. And then that's about the time I started to look into the crypto industry in a more serious way. That's when I ended up moving to California, which is where I live now. I did a master's degree in Stanford and trying to understand the crypto and blockchain industry a little bit better. I ended up liking the crypto industry. I ended up liking California. So until today, I basically work with crypto and I live around here. Bitwise was founded in 2017. It is the first and largest manager of index crypto funds, as you said. Basically, we have two lines of businesses. Number one, we commercialize and we manage crypto investment funds. We have a family of funds, and our flagship product is a fund that tracks an index that represents the crypto industry as a whole. So you can kind of think of as you could invest, let's say, in the equity space. If you want to invest in the S&P 500, if you're in the US, maybe if you want to invest in the Ibovespa, if you're in Brazil, these are indexes that represent the broader market. So basically, one of the things we've done is we developed this index. It's called the Bitwise 10, that tracks the performance of the 10 largest crypto indexes. And our flagship fund basically follows that index. So that's one side of our business. The other side is, as you mentioned, we are one of the companies leading the process of creating and approving an exchange-traded fund, which is an ETF here in the United States with the Securities Exchange Commission, with the SEC. So Bitwise has a very experienced team. My boss and our global head of research, Matt Hogan, is a pioneer in the ETF and indexing space. We count with some of the best investors in the Valley, including Naval Ravikant, Alad Gill, Khosla Ventures, Blockchain Capital, which is one of the largest crypto VC funds. So yeah, it's a company that has been, let's say, almost 4 years now in the crypto industry, and I'm happy to be part of this team.
That's pretty awesome. When I was researching about Bitwise, I read that basically they say that they provide these single asset funds that are liquid, low cost, and secure. And that their goal is to help forward-thinking investors access this emergent asset class in products they can trust. So, getting real, right? So being a very conservative investor as myself, so I'm definitely not this forward-thinking type of investor at all. You have to please help me understand how the words cryptocurrency, security, and liquidity can actually be on the same phrase.
That is an awesome question. And thank you for asking it, because this is an issue we talk to our clients on a daily basis. So maybe something I should have clarified is that our main target is the financial advisor community here in the US, which are by and large conservative investors. I mean, they're usually not the super aggressive hedge funds and that sort of stuff. So that's a question we usually answer. It is a very important one. Probably one of the things that most attract our investors to come into the crypto industry is that if you have well-sized exposure, meaning if you invest in this sector with a small percentage of your total assets, the contribution that it can make in your portfolio is very, very strong without adding a lot of risk. So usually when we talk to conservative investors, basically we like to stress out that these investments should not take more than 1, 2, or at most 5% of their total assets. It should be an amount of money that if it goes to zero, let's say in the worst case scenario, it is not something that would hurt the performance of their portfolio as a whole too much. On the other hand, it should be a position that in case this asset class goes up by 10x or more, which is what I expect to see actually over the long run, it's something that would represent a meaningful impact in their portfolio. For most clients, that's around 2% exposure. And for most clients, even the most conservative ones, having a 1 to 2% exposure to this asset class is not that much of a big deal. And by the way, we spend a lot of effort on producing content and research for people to address this market. And earlier this year, we produced a fairly extensive white paper trying to show what the impact that a crypto asset in a portfolio could have. And it's very, very remarkable. So the first thing I would address in your question is that you don't need to have a very high exposure of this asset class in order to see pretty significant results. The question you have on security is a major one, super important. I'll try to touch briefly on this, but crypto assets are bearer assets in the sense that it matters a lot who is doing the custody of these assets. We at Bitwise, we work with some of the best custodians in the world. You can think about like institutional grade custody, which is not necessarily what many investors are going to get if they buy from an unregulated exchange or an app. So security is super, super important. It sits at the core of everything we do. And in the crypto industry, this is an amazingly important aspect. And number 3 is liquidity. And that is an interesting property that crypto assets provide by themselves and that we also provide in our funds. So this is in the sense that you can come in and out of this industry in a relatively easy way, although we usually recommend most people who build a position in this industry to stay for the long term. This is an industry that allows you to enter and leave your positions with relatively ease. This will, of course, depend on the financial product that is in question. But that's how I would answer without entering in the merit of how important and how exciting this asset class is. I would say that even if you're a conservative investor, having a very, very small exposure should not hurt your portfolio too much and can provide a lot of very, very important benefits too.
Yeah, thanks so much for the clarifications. Actually, using this strategy makes a lot of sense to me. So recently, a Brazilian company that also manages crypto assets got approval to launch the first stock exchange in Bermuda together with NASDAQ. And then we saw in Canada, they're also analyzing this move with another crypto asset manager. How do you see this movement? Which countries you predict as followers? I would guess usually countries that are more flexible when it comes to those regulations, right? Or maybe also forward thinking. Do you feel that this is the beginning of this new chapter in the global economy?
Yeah, great question. I'm fairly familiar with the Brazilian development because I used to be part of the team of Hashtags, which is the company that is building this exchange traded fund. in Bermuda. Before I start answering this question, I thought about quickly explaining what an ETF is, because I think I do see that in some countries, the ETF product is very well developed and very well known, but in other countries, it's a lot less. So maybe I thought about spending a minute or two explaining what this is.
Sure, go ahead.
Okay. So as you said, ETF stands for Exchange Traded Fund. And the idea is to encapsulate some sort of investment that you can buy it and sell it just like you can do with a single stock. So think about, for example, if you want to invest in gold. One way to do that would be to buy a gold bar. That's obviously very clunky because you need to go somewhere, buy this gold bar. You would have to hold it yourself, or you would have to pay someone to hold it. If you ever want to sell it, you would need to find a market to sell it. And that works, and that does have some benefits, but it's not super convenient for someone who wants to trade this, as you can trade a stock. Like you can maybe buy it in the morning, sell it in the afternoon, or if you want to have this level of liquidity. So basically what an ETF does, and there is, for example, a gold ETF. One of the largest ETFs here in the US goes by the ticker of GLD. So that's a gold ETF. So basically what you do is, instead of buying a bar of gold, you buy this share in this ETF. And basically this ETF is a trust that holds gold on your behalf. That allows you to invest in something like gold, which would typically be hard, in a very, very easy way, just like you would buy a stock of Apple or Microsoft. So this is an industry that grew a lot in the US over the last 20 years or so. As I said, our global head of research, Matt, is one of the pioneers in this industry. It's one of the large pockets of investments in the US today. And there are ETFs basically for anything you can think of. There are ETFs for gold, there are ETFs for oil, there are ETFs for indexes. So let's say if I want to buy the S&P 500, which is an index that tracks the large cap US companies, I don't need to buy each one of these shares independently. I can just buy an ETF of this index that tracks this whole thing. I can buy an ETF for Japanese stocks or financial companies or basically gold miners, basically anything you can think of. So one of the first things that came to people's mind when Bitcoin came about and Bitcoin started to become an investable asset is, okay, so now we could do a Bitcoin ETF. And at least here in the US, the Bitcoin ETF efforts, I think they go back like as far as 2013, I guess. So for now for 7 years, there are companies, and we are one of them, trying to create and approve a Bitcoin ETF. This is a lengthy process. We expected it to be. Everyone expected it to be. It is a very, very heavy, it has a very, very heavy regulatory burden, but we have been definitely making progress over the last few years. So that's basically what an ETF is. Try to put a little bit the Bitcoin ETF into context. And now one thing we're seeing is that there's a number of other jurisdictions where we're seeing exchange traded products being launched. Some of them are not properly an ETF, not an exchange traded funds, because there are other types of exchange traded products. I don't want to get into the details here, but there are, for example, exchange traded notes and other stuff. And we've been seeing some of these being approved in other jurisdictions, like in Europe. As you mentioned, Hashtags is making this effort with Bermuda, and we and some other companies are doing it in the US and in a few other countries. What I can say is that we are 100% focused on the American market. That is our public. And we think that for most of our clients, a US ETF is the product that would make them comfortable with investments. Having that said, the SEC, which is the US regulatory body for securities regulation, might not be the first mover. Actually, it's probably not going to be a first mover. So there are all these jurisdictions that have more lax controls, and they are more innovative, and they might be embracing crypto better. I cannot tell you which one's going to be the first one. I don't know, but there are countries like Bermuda, Switzerland, Singapore that have relatively lax or let's say more progressive regulation towards crypto assets. So maybe some of these jurisdictions will come first. These markets are typically a lot smaller. So I think the interesting question is which one is going to be the first large market where we're going to see a crypto ETF. And here, I don't know. Let's see. Let's see what happens over the next few years. But I think here there is a chance that the US could be, if not the first, one of the first.
Yeah, makes sense. And, thanks a lot for all the explanations. For sure, our listeners will appreciate a lot. So, Bitcoin has been really valued this year. Why do you think that, this happened? Why do you think it has been so valued? Which macroeconomic fundamentals could possibly justify this move? Do you think that maybe, with COVID, people started just questioning the current financial model and use it as a diversification strategy? Or do you think that it was something that was already a coming trend unrelated to the pandemic?
Great question. I think it was a little bit of both. One thing we have been seeing over the last few years is the professionalization of crypto as an asset class. So we have seen companies like the Chicago Mercantile Exchange, the CME, which is the largest derivative exchange in the world, building Bitcoin futures contracts. We've seen Fidelity, which is one of the largest asset managers in the world as well, opening a division focused on digital assets. We've seen the parent company of the New York Stock Exchange also opening an arm focused on crypto assets, and a number of very, very important institutions starting to get their feet wet into the space. But in 2020, this really moved to a whole new level. So I think we saw a few things here. Number one, I wouldn't say that COVID was the cause. I would say that because of COVID, there was a lot of experimentation in monetary and fiscal policy. So we all know how much money or how much reserves central banks have been printing over the last many months in order to fight the recession that came as a result of COVID. And that made a lot of investors worried about what would happen in our monetary system as a whole. And Bitcoin, with this digital gold use case, comes up as a very, very feasible option as an investment. A number of very, very prominent investors that announced Bitcoin positions. Probably the biggest of them was Paul Tudor Jones, who's one of the great money managers here in the US. He announced a 2% allocation to Bitcoin in his funds. At the same time, there's a lot of exciting things happening in the crypto space, like with decentralized finance and smart contracts. And we have seen some interesting technical developments happening this year. So that is also interesting. And third, but not least, we also saw a number of very important and positive regulatory developments here in the US. I guess probably the most important of them is that the Office of the Controller of the Currency, which is a branch of the Treasury Department that regulates national banks, they have clarified that banks and financial institutions can custody digital assets, that they can also serve crypto companies, and that they can even use deposits to back stable coins. So that's kind of a big deal and a big improvement on the regulatory front. I guess all these things together started to make a lot of companies dabble with crypto in a deeper way than they did before, and also investors to accept this new asset class much more easily than they were a few years ago. We can see this in our inflows, in the number of clients we see and talk to, that 2020 was really a watershed year for crypto.
Okay, David, a lot of great information. We need to end this first episode, but stay tuned, everybody. We're definitely coming back with David Lawant on the second episode of Future Hacker. Stay tuned.
Future Hacker. Life. Path. Future.